Home prices in some US cities have dropped by over 10% in just months. Foreclosures are creeping up and mortgage rates are still climbing. Is the housing market on the verge of a crash? Let's break down the warning signs you need to know. A housing market crash doesn't just affect investors, it affects everyone. Whether you own a home, are thinking of buying, or just want to protect your finances, understanding the warning signs of a crash is critical. I'm Erica McClain, seasoned realtor, and today we're diving into real indicators that could mean trouble ahead, unfortunately. We've seen the market boom over the past few years, but here's the reality: housing isn't invincible. There are clear warning signs that a shift is coming, and ignoring them could mean serious financial loss. Some of the biggest red flags right now include rising mortgage rates, declining home values, home affordability, increased foreclosures, slowing home sales. So let's break these down and see what history tells us about where we just might be headed. First up, rising mortgage rates. As interest rates go up, borrowing becomes more expensive, meaning fewer people can afford homes. This can lead to price drops as sellers struggle to find buyers. Second, we have declining affordability. When home prices rise too fast but wages don't keep up, demand drops. And when demand drops, prices have to adjust. And then there's foreclosures. While we're not at 2008 levels, foreclosure rates are climbing. More people struggling to pay their mortgages is a red flag for an unstable market. Finally, we have slowing home sales. Less demand means homes sit on the market longer and sellers start cutting prices to compete. This is one of the biggest signs that the market is shifting. So, what does this all mean? We're already seeing homes take longer to sell, price reductions becoming common, and buyers getting hesitant. In some markets, prices have already dropped significantly, and history tells us that when this happens on a large scale, bigger declines can follow. Some economists predict a market correction, while others say we could be headed for a full blown crash. Either way, if you're thinking of buying or selling, it's critical to stay ahead of these trends. Okay, so to recap: rising mortgage rates, declining affordability, increased foreclosures, and slowing home sales are all red flags for a market downturn. While no one has a crystal ball, these signs tell us that big changes are coming to real estate. Another thing that every homeowner right now should know: if you're having trouble making your mortgage payment or late on your mortgage payment, a lot of lenders aren't going to tell you this because they're like the middleman between the investor um, and you, your loan servicer. If you're having trouble or you're behind, you should check into what they're calling the CARES Act. There's certain things that you need to qualify, but most of the loans out there, I believe, are backed by HUD, and I think that this might be a HUD program. I've had several clients be able to take advantage of this CARES Act, getting a lower locked in interest rate and even a reduction on the amount they owe. So if you're struggling or you're behind, I would definitely check into that. You can try to do a loan mod with the servicer for your bank, but remember, they're the middleman and they're working for the investor, not for you. So the CARES Act is something you should check into if you're struggling. Okay, I want to hear from you. Do you think we're headed for a housing crash, or is this just a market correction? Drop a comment below, and if you want to know how to protect yourself in a shifting market, check out my other videos on smart home buying strategies, and don't forget to subscribe for more real estate updates. I hope you found this information helpful. And thanks so much for watching. Hope to see you back for another video.